Well, hello, and welcome to the MilVet Podcast. Your podcast hosts are Brendan Aronson, Tim Shaw, and Beau Higgins. We are military veterans, entrepreneurs, and investors. But most importantly, we strive to empower military service members, veterans, and their families. We believe that all veterans deserve a career that fires them up, a career in which you can learn, you can earn, and you can build a world-class network. On this podcast, we interview civilian and military veteran leaders who are incredible founders, writers, thinkers, and investors. My primary goal is to inspire you to achieve great things. Let's dive into today's episode. Hello, and welcome to another edition of the MilVet Podcast. I am your host, Beau Higgins, and I have the privilege to be joined today by Brooke Coburn, who's going to share a little bit about his journey and what he's doing these days. For those that may not be familiar with the MilVet is an executive platform that provides veterans an opportunity to find jobs in the private equity venture capital founder space. Great support network for those veterans interested in getting into this world. So if you are a veteran that's interested, definitely check us out. We just updated our website. It's TheMilVet.org. So check it out to see the podcast, to sign up for our newsletters, to learn about events we have upcoming. So encourage you to check that out. If you're a company interested in veteran talent, also reach out to us. We're happy to talk to you anytime. But today we are focused on our guest and the story of Brooke Coburn. So Brooke, welcome to the show, and give the audience a little heads up of what you're doing these days, man.
Oh, I appreciate the opportunity. It's great to be here, Beau. So brief version of what we're up to is my partner and I have worked together for more than 25 years, and we started a private equity firm together about 5 years ago called Meridian Partners. We're based here in Washington, one office, one fund, one strategy, like keep it simple, stupid. And we invest around the national security ecosystem principally. So sort of these esoteric businesses that are supporting the government. A lot of it is national security related, so supporting Department of Defense or the intel community. We invest in a lot of companies that do government technology modernization, so everything from cyber to cloud migration, you name it. And we do some commercial aviation as well. So we have a lot of history, and I can tell you a lot more about that. But Meridian is a relatively new firm. We started about 5 years ago.
Awesome. No, excited about that. I know it's something, obviously, being in a defense space that you're in is of high interest to our veteran audience in particular. But yeah, would love to hear kind of how it all started. Is it a career that you had a passion for at a young age? Were you an Alex Keaton back in the day and always wanted to get into finance? Or walk us back to kind of how it all started. Back to Princeton, I know it was where you graduated from. What was the inspiration to kind of get into this space back in the day?
Yeah, listen, I would tell you it probably a bit of luck and probably some fate. But I mean, listen, I had no even understanding of what private equity was when I was in my early 20s. So, you know, I grew up, I can tell you more if you care to know, but I grew up in a very rural part of upstate New York and found my way to Princeton, and wasn't sure what I wanted to do, like most people who are sort of 18 to 21 years old. And I took a class my senior year in corporate finance, and it was one of two finance classes that were offered at Princeton, and became really interested. I like many folks who may have grown up looking at the CNN with these numbers scrolling across the bottom and having no idea what they meant. It was like Gaelic. Anyways, this corporate finance introduction sort of demystified some of that. And, I started looking into what careers sort of in the finance world would look like. It was spring of my senior year in college, so I had missed the recruiting window, but I sent out 70 odd recruiting letters and resumes, and ended up finding a role on Wall Street. So I did that for a few years, and again, I knew nothing of the finance business, like literally nothing. My whole family are like teachers and clergy, so I was choosing a path that was very different than anything that anyone in my family had done before. But those are great jobs right out of college. I mean, that you work, crazy hours, but they invest in you and they train you. You have some great mentors along the way. In any case, I worked with a bunch of companies that had been backed by venture capital firms and private equity firms. And this is going way back. This is almost 30 years ago. Um, and as I got to know some of them and I started to understand sort of what it was that they did, I became more and more interested in it. I mean, these are folks who are not just, if you're a banker, you live with a company during this brief moment when they have something important going on. They're raising capital, or they're doing an acquisition, or they're merging, or they're going public, and then you leave. Well, the venture capital and private equity firms are sort of living with these companies over their life cycle. And that was much more interesting to me. And some of the people that I've met were very impressive. So I started looking into that as a path. And, what's important probably for this audience is like private equity today is a big mature industry. There are lots of firms that do this. It was still a pretty nascent industry at that point. So it was not like there was not a well-worn path the way there is today from, the banking world into private equity. So I was sort of feeling my way through it. And I'm originally from upstate New York, as I mentioned. I had a lot of friends who were in New York. I planned to stay in New York. And a headhunter called me and said, "Hey, there's this firm in Washington called Carlyle, and they saw your resume and they'd love to meet you." And I didn't have any interest in being in Washington. I'd never heard of Carlyle. They ended up coming up to New York, and I met some of the folks, and I really liked them. And if you spend time in the finance industry, you'll realize pretty quickly there are a lot of people who are smart and will tell you how smart they are. There's a lot of narcissism and big egos, and that was sort of what I knew being in Wall Street. Carlyle was a very different place. It was plenty of super talented people, but it was a very collegial, team-oriented, sort of humble culture, and that really resonated with me. So long story short is I ended up moving to Washington to go to Carlyle, and at that point, Carlyle was 20-odd investment people, and they were trying to raise their first $1 billion. And so, like, probably lesson number one for the audience is luck matters. I landed at Carlyle, which ended up becoming a huge, successful platform at a pretty early stage, at a time when the private equity industry was still pretty nascent. So calling it like a premeditated start, I definitely was not Alex Keaton. I assure you that. I sort of found my way into it. And after 25 years at Carlyle, which was really terrific, ended up starting my own firm with a former Carlyle partner.
That's awesome. No, it's interesting, I think, for folks that may not have the background, and you talked about it a little bit, just the whole concept of private equity, what it is today, is vastly different from what it was 30 years ago. I mean, it was not a well-known path, maybe. I think there was traditional banking as we kind of think, get the JP Morgans of the world, right? Were always there, maybe in a traditional fashion. But the private equity side was an unknown. I think, back when you were getting into the space, obviously you had, a little bit of luck. I think you make your luck, but I think you also hit on a point that I love, in that you chose the people in a lot of ways, right? You chose the team because of the culture. And I talk about that a lot, for veterans when they're getting out, that, a lot of times it's not about, you have the skills a lot of times to do many different jobs, but it's important to pick, a job where you feel like you're going to be a cultural fit as much as it is you're going to be, a fit, from a work standpoint. I think that culture thing really matters. If you're going to be there and stay for a while, you want to have, people that you're excited to be at work with every day, and they know they have your back. And I think that's something that you have in the military. And it's something that a lot of times you're looking for when you transition out, to find a team where you have that camaraderie, where you have that same shared sense of purpose, because that purpose is something that we lose many times as we transition out of the military. And would you hit on that a little more? And what was the culture like at Carlyle back in the day that you felt made it feel different or special, or just for you, the right place that you wanted to be?
Yeah. I first off, couldn't agree more that culture is like the most important thing. I didn't know that when I was 20 something, but I now realize that with the benefit of hindsight. So I'll tell you a funny story. So I'd been interviewing with all these private equity firms in New York, and it's right out of central casting, the Gordon Gekko types, and no shortage of folks who will tell you exactly how smart they are. And they all want to understand how you think about investing. And so one of the common questions was, give me your best investment idea. And so, I had this whole script that I'd worked up, and I came down and I was interviewing at Carlyle. And one of the interviews was with Bill Conway. So I interviewed with all three of the founders, which will tell you how small the firm was at the time. They would, take the time to interview a junior entry level guy. But I went and interviewed with Bill Conway, and I went in sort of loaded for bear, having anticipated and experienced all of these different sort of meat grinder sessions with other private equity firms. And I sat down across from Bill, and he said, "Tell me about your family." And I was like, am I being punked? But in fact, it was like the real question, and that's what we ended up talking about for an hour. And so I went back to my little apartment in New York and was trying to figure out what I was doing in my future, and I ended up getting an offer. And I didn't have any. I'd never heard of Carlyle. I didn't have any interest in living in Washington, but I sort of said, I'm just going to follow my gut on this one, and that was probably the luckiest decision that I made, because, and this is what I counsel sort of young folks. I have gray hair now. I've been doing this for a while. When I'm talking to young 20 somethings who are in college or shortly out and looking for a next career step, I tell them, the thing that I've learned is, number one, select for culture. It's the most important thing. In all of these jobs, you're going to be working really long hours. So find a place that feels like you, and where you feel like you belong. Some people there are plenty of people on Wall Street who really like that sharp elbowed culture. In hindsight, I wasn't one of them. And so, I think just prioritizing that was sort of a gut read at the time, but I think, with the benefit of hindsight, that's really, really important. I think the second thing, which was also a great thing at Carlyle and has continued, is finding a few mentors, finding some people who will take a real interest in your professional development, folks who will sit with you, when they could be going home to have dinner with their families, but will spend that extra hour, either helping you to learn a skill that you don't yet have, or I had mentors who would sort of, let me tell you about how I think about kids in schools or whatever, dealing with aging parents. Like, that type of wisdom is just worth its weight in gold. And so I think, like, selecting into that type of environment, hopefully you can find that in your work environment. If you can't, finding mentors who are outside of your work life is really, really important. I'd say the third thing, not that you asked, was that I counsel is, I landed in the private equity business at a time when it was taking off. I mean, it was a very small industry. There were a handful of firms who did this. Today it's a massive industry, and there's no question that my career, benefited from the fact that I sort of landed, on the launch pad as the rocket was about to take off. So I think in one of the things I did learn is that there are a lot more opportunities in growing environments than in lower growth environments, because in a growing business, whatever it is, you're going to be pulled in new directions. There aren't enough smart people to do the work. Like, that's the bottom line. And therefore, as the firm grows, if you are willing to work hard and learn new things and sort of have a growth mindset, you're going to be pulled along with the growth of that business in a way that'll be really beneficial to your career. So again, I knew none of these things when I was 20 something, but I think in hindsight, like, the cultural piece in particular is the most important thing, because you're going to work hard and you want to be around people that you respect, and there's a value system in place that sort of is a fit for who you are.
All of that is great advice. It sounds simple, but it just takes a while, because you don't know that going in. And I'm going to pull the thread a little bit on the mentor piece, because I think that's something certainly for veterans that are transitioning out or looking to get into the civilian sector, but for anyone, not just veterans, to find someone that's done it before. And that's why I think podcasts like this are important, to kind of, show examples of people that have done this before. No one starts out being born knowing everything about the industry they're getting into. You need to start at the bottom and work your way up, right? And I think we also, a lot of times in the veteran space in particular, there can be this sense of this imposter syndrome, right? Where most of these people that are at these firms, like yourself, you started right after college, and you've been doing this, work in the industry for several years. By the time you're in your 30s, you had been around the industry for a while. For a veteran, a lot of times they're starting their careers, their second careers, at age 30, maybe, right? So I think there's always this sense of, well, I haven't been doing it for that long. Am I going to be okay? Can I do it? And they can. I mean, but you need mentors you need to find the right. You have to work really hard. I'm not saying you can't. It's going to come easy to you, but you can do it. So
Yeah.
don't be afraid. Talk to folks that have been there, done that. I think the advice that you're sharing is great about, find the culture, find the mentor, and work really hard, and in the right time and right place, you can have a successful career in this. But that mentorship piece is hugely important, I think. And there are, in the veteran space, there's a outfit called American Corporate Partners that I often recommend for veterans. ACP found a guy named Sid Goodfriend, who's a Wall Street guy that wanted to help veterans, find jobs in Wall Street, So, there is that mentorship is out there, but it's so important to be successful, to be able to, find someone that's willing to take that time to invest in you. They see the future better than you can sometimes.
Yeah.
So I love that you hit on that point for sure.
Yeah.
It's great.
Just riffing on something you said, I think that sense of insecurity is also like a very natural thing. Like, it's funny, I've been in a lot of forums with some incredibly accomplished CEOs and gotten to know them. What all of them are insecure. All of them have a bit of an imposter syndrome. They feel like people are going to figure me out, that I don't know what I'm doing. So I think, that some of the most successful people in the world, like, wake up every day feeling that same way. So I don't think that I think it's a very natural thing. And frankly, it's a positive thing. It's because that insecurity is going to keep driving you. So I think, find the mentor, and then, but also a lot of this is just about grit. It's about time on task and resilience. And if you're really interested in this, just sort of stick with it, and because you will create your own luck over time. So I just want to sort of offer that, because I've seen it again and again with these very accomplished people who feel like I don't belong here. This is not the place for me.
Can you go back and give us a little insight of how things changed over time at the Carlyle Group as well? Because you talked about, you got in, but it was kind of on the ground floor, and now it's not a household name; it's a well-known entity in the PE space, right? It's one of the big boys out there, right? But when you started, it was boutique, small, and it obviously, it grew exponentially. What was what can you talk about that made Carlyle successful? And it might be the culture, and you talked about some of that a little bit already, but what did you see there that you took away that was maybe different? And, how do you feel it was, what was the driving factors of the success that maybe allowed it to be differentiate itself from other firms out there?
Yeah. So I think it starts with culture, which we talked about. I mean, there were people who sort of self-selected into this environment where, like, all right, we're going to work well in teams. We're going to be humble. Like, there's a value system there that, that I think a lot of people sort of were drawn to. And so I think that was an important part of it. I think, Carlyle specialized. And I think, like, in this world, there's very little room for generalists anymore. Like, the world is just too competitive. You can't, as an investor, think, so we're going to go do cosmetics one day, and we're going to do, the hot section of aircraft engines the next day, and we're going to go do cybersecurity the next day. Like, those, you can't do that. There was a time, probably 30 years ago, when that would have worked. I think one of the things that accounts or explains Carlyle's success was Carlyle specialized at a relatively early stage in the industry. And, a lot of the very earliest private equity firms, the Blackstones and the KKR, were New York based. They really shied away from a lot of regulated industry. I think the view was that there was stroke of pen risk, and the government's hard to understand, and, like, let's just stay away from that complexity. Carlyle, I think, sort of ran towards that complexity, and the firm was based in Washington. And very early on, even before I was there, the firm, they hired in a number of former government leaders. Frank Carlucci was chairman of the firm for a long, long time. Jim Baker was there as a partner and advisor, Dick Darmond, like many others. They developed a specialization around these sort of esoteric government businesses. So aerospace, defense, government services. And there were very few firms that would sort of wade into those waters, because it was sort of viewed to be shark infested and hard to understand. But So I think part of it was culture. Part of it was they picked a spot where others were not really playing, and then they developed real specialization around it. And ultimately, in this business, it doesn't matter what your brand is or how big you are or how impressive your founders are. If you don't drive financial returns for your investors, like nothing, you're not going to succeed. And they had a lot of success, especially in the early days. So I think to me, those are some of the things that explain success that the firm had. So they started trying to do one thing well. I say I joined a private equity fund so that they had one fund and they did one thing. When I left, it was like a supermarket of funds that play sort of around the world across different asset classes, sort of up and down the capital structure. But in the very beginning, they were really laser focused. And, the firm that we are building today is really trying to sort of replicate that, with no ambition to recreate the next Carlyle, but we're a specialist. Like we have one fund, we have one strategy. We're trying to do one thing extremely well. And I think in today's environment, that's really, really important. But going back to, what made Carlyle successful, I think a lot of it sort of started with those core ingredients, and then they built from that success to having success in lots of other dimensions.
And I'm curious personally, and I think our audience would be interested in this as well. I mean, what is like a day in the life in a PE firm like? And like, or maybe what I should ask this. I'd love to hear almost like from an entry level job, what does the job look like? And what does progression in the space look like to when you're probably making decisions, vice you're making the sausage? What does that look like? When you first started, kind of what are the roles that you have and what do you do? And what, because what I'm really trying to pull on is what makes you successful to allow you to progress in the firms? What are people looking for? I mean, is it, picking winners? Is it, I mean, that's probably part of it in some ways, but, how does that, what does the progression look like, advancement look like in a PE firm?
Yeah. So I'll talk about it sort of first in terms of like the investment path, but so just to explain sort of how our model works, we're a team of investment professionals who are subject matter experts in these esoteric markets that I described. But we pair our investment team with a group of rock star operators. So it's basically seasoned operators who have run successful companies in these sectors before. And I'd say the formula or the recipe for success is not just having smart investment people or a bunch of great operators. It's putting the two of them together, because that's really sort of where the magic happens. It's very rare that we'll invest in a company and we just sort of like show up at the board meetings every quarter and everything's going great and we could just sort of hang out. Like usually, these are growth companies. Oftentimes, most of what we've been invested in are companies that were bootstrapped by a group of founders over time. They may have their brother-in-law as the CFO. And they often know. Listen, I'm not today sort of equipped to build the next $1 billion enterprise, but I need some help. I need to help building a world-class team, or I've got these capabilities, but I really need some help in figuring out how these could apply at it's special operations, or you name it. And that's a lot of what we do. Is sort of so it's marrying that investment acumen and that investment talent with the operators, and it's the two sort of working together. So just in terms of the career pathing, I'll talk about the investment piece first. So that it's very much an apprenticeship business. Like there's no class that you can take that will sort of teach you how to do this job. We tend to hire people out of the 2-year investment banking programs on Wall Street for a couple reasons. Like all private equity firms are small, and we don't have really the resources to do a lot of the heavy financial modeling training and so forth. The banks do so well. So, we typically will hire people coming out of those 2-year programs because they've been well trained. They typically are packing like 4 years of work into 2 because they literally work 18 hours a day. And 3, they got some grit, if they hung in that situation. So it's a positive sort of, you get positive selection bias. So we hire people in typically at that entry level, and private equity firms are different, but I'll tell you how we do it. We're looking to hire people in at that entry level position, and that's a partner track position. Like they've got to earn it, and they may decide they want to go do something else with their lives at some point along the way. They may not cut it, but that is like that entry level position is a path to being a partner. And we got a lot of people who are sort of, at the mid level and moving up, who started at the junior most level. And so, we're looking for talented people with grit and who have that sort of the skills that I described. But then we'll teach them the business. So we invest really heavily, and our industry is sort of hard to understand. Anybody's trying to unpack the government and understand like how government contracting works or how to navigate procurement. All of that is really hard. But we invest heavily to sort of teach people the industry, and then we try to teach them the deal business too. And we have a whole skill development pyramid. So the base of that pyramid are sort of core analytical skills, learning how to perform due diligence and the financial modeling and so forth. As you move up, you become more of a project manager, sort of overseeing investment execution, where you're coordinating a team, an internal team of junior analysts, but also lawyers and accountants and consultants. And then as you get sort of up the pyramid, you'll be in charge of originating investment opportunities and then ultimately, potentially running a firm or managing a board, being a chairman of a board. So it's a progression. So we're looking to hire people in, invest in them, and over a period of it depends on talent and other factors, but over a period of 8 to 10 years, there's a path to becoming a partner in the firm. So that's like the investment side. And I would say like for this audience, like that's a hard silo to break into because the hiring is so formulaic. If you didn't have that investment banking training, the burden of proof will be on you to sort of demonstrate that you have the financial modeling skills. It can be done. You can go and do these Wall Street prep courses and learn those skills, but we generally play Moneyball. Like we have a formula that works. We're not that creative. We hire sort of out of this pathway, and generally it works pretty well. So I think like breaking in at that level it can be hard, not impossible, but it's harder to do. I think that and just to maybe overshare, those investment banking associates or analysts, when we hire them, will have been interviewing for those jobs their sophomore year in college. So, it's funny how many people I meet who are like juniors or even seniors in college, and they've missed the recruiting window. It wasn't like that when I was growing up, but there's a very pre-professional path now, which I think is a terrible thing for the industry, but that I'm not in a position to change it. So the on-ramp into these investment jobs generally runs through investment banking. Doesn't have to, but that's sort of the easiest way to do it. On the operational side, I'd say like that is where we succeed or fail, not based on just our investment judgment, but on the quality of the operators that we work with. And like, so the operating side. So think of this as your portfolio CEOs, the senior leaders of these teams. Those are the rock stars of our business. And I would say, that is a pathway where, we have 8 companies. I think 4 of them are led by CEOs who have military backgrounds, maybe more than that. And the senior leadership teams are you could go through them, and they're heavily represented with veterans. So I think like if you're thinking about the private equity business and sort of entry points, the investment. A lot of people try to break their pick on the investment path, and it doesn't have anything to do with the fact that you might be a Rhodes Scholar and you may have done incredible other things, but if you didn't follow that pathway, the odds are going to be stacked against you finding one of those roles, just because the private equity firms are so formulaic in how they hire. So I wouldn't view that as a referendum on you. It's just the way that the hiring pathway works. However, on this side, this can be just as lucrative as this, and can offer just as many interesting career opportunities. The same things that we've been talking about really matter on this side of the house. Culture, finding great leaders who will provide you with a mentorship experience. One of our best CEOs, who unfortunately has been so successful she doesn't want to be a CEO anymore, Tiffany Gates, has led 3 or 4 incredibly successful companies in our space. She now serves as a board chair after several stints as a really successful CEO. But around her is this whole constellation of talent. Young folks, mid-level folks, peers who she's been sort of bringing along. And, we're now although, Tiffany wants to be a board chair and not work as hard as CEOs have to work, she has this whole network of people, of talent that she's sort of brought along, who she's plugging into our companies. Like, so I think a lot of the sort of career lessons from the investment side also apply over here. But I think this is an underappreciated career opportunity for folks. I would look in that area and do some legwork in that area if you're really interested in being a part of the private equity business.
No, that's super insightful. And again, I think that's where from the MilVet side of the house, that's where we typically focus on, right? The placements that we have for veterans are mostly as operators, right? It's folks that have, they bring that leadership experience, which you have in the military. Usually the folks have gone back and gotten their MBA, and they have some experience, whether on Wall Street or in consulting, and then they want to be operators again and move from the big firm to that smaller place where they're running the show, and that's where we've seen, I think, the sweet spot for the MilVet has been in, finding that intersection between blue collar and white collar, right? You find folks that can lead the hourly, workforce, if you will, at a plant, at a facility, building something, as well as have the experience to manage a P&L and to talk to a board and to have that white collar and be able to engage. When you can bring that together, it can be a unique skill set on the operations side. And that's where we've certainly found where veterans typically thrive, right? And and it can be the operator role, maybe the chief of staff type of a role. Those are places we've seen veterans, perform very well. So, but it's great to hear. I liked how you broke down the kind of two tracks. Both can be super lucrative and successful. I'm interested to hear how almost preordained some of the investment track is from an early stage, which makes it harder to get into. But we've certainly had more success on the other side, other track, if you will. So it's been good to hear, though.
Yeah. I don't want to discourage folks from the investment track if they want to go that route, but I think just because there's such a pre-professional track there now, and it starts so early, if you happen to go and serve for 4 years and you miss that window, you won't naturally be able to catch that on ramp. The other thing I would say, though, is, I spent a long time at Carlyle, and I now have my own firm, but there are a lot of great emerging firms out there who are less formulaic about how they hire. Like, if you want to go work at Blackstone or KKR, they're probably going to be following that very formulaic approach. If you're joining a firm that's more nascent, as we were 5 years ago, we're probably going to be less formulaic in our approach. So that's one point. And the second one is, if you wanted to play in the NFL, 40 years ago, you probably had to go to Michigan or Notre Dame or Texas to be discovered. And, today in the deals business, there are, there's tons of capital for great ideas. So if you can go and find an investment opportunity that you have conviction around, you can go, there's a whole new industry called fundless sponsors, basically private equity firms that don't have a capital, but they find the deals first, and then they go and find the investors. And there are dozens and dozens, if not hundreds, of groups who are out there looking for those investment opportunities. So just because getting into the on-ramp Blackstone is going to be hard to do doesn't mean that door is closed. You just have to sort of come at it from a slightly different angle.
Got it. No, that's great advice, and interesting to understand that. Again, there's a lot of different ways to get in there: traditional, non-traditional. And I like the idea of being discovered. That you're at the NAIA school, maybe off the roadmap, doesn't mean that you can't have a career in the big leagues eventually. So that's
exactly. Like if you're a good kicker, like, they're going to find you in Division III and in rural New York. The world's pretty flat.
I'd love to kind of hear, as we kind of move toward the end of the show a little bit. What decision did you make? What was kind of your calculus on leaving and starting your own fund? Obviously, you had a super successful run at Carlyle. Did you decide, all right, I'm betting on myself? Or did you have an idea? Did you have what was kind of the impetus to make that leap and do your own thing?
Yeah, it's a good question. I'd say it wasn't one thing, but I'll tell you what impacted me heavily. I did. There's an exercise some of you may have experienced called a life walk. You can look it up and there's a version of it called the Death Walk too, which is a little bit more morbid, but you can look this up online. But basically, it's an exercise where you sort of start on a timeline of your life and you say, listen, like, people live to be 75 years old. That's average life expectancy. You're sort of at this point, you're 40. And then you start there and you walk forward every decade. And so, okay, I'm 50 and my kids have left for college, and now I'm 60 and I've lost my parents, and now I'm 70. And then at the end, it's, the end of your life. And it's a very powerful exercise to sort of force you to reflect on like life choices. What haven't you accomplished that you want to accomplish in your life? And I did that. This is now probably almost 20 years ago. And I realized that one of the regrets that I would have is if I didn't take a shot at trying building my own firm. So that's been there for years. And it was really a question of what's the right time to go and do that. And, Carlyle's a great firm. I had an incredible experience. I'm very thankful. I got a bunch of great friends there, and they were really supportive as we built our new firm. But, the firm changed a lot. It went from being a small single office partnership with one office to a publicly traded company with thousands of employees all over the world doing lots of different things. And on the way, as is often happens with companies as they scale, it became less fun. There's more bureaucracy. Being a public company introduces a whole new set of things that not very many people enjoy. So I just hit a point where and there was pressure to focus on doing bigger and bigger deals because they were raising larger and larger sums of money. What I realized and what my partner realized was, listen, the best opportunities are really at the lower mid end of this market. Like that's where you can make like great returns for your investors. It's also where you can have the most fun by far. And so like what we were trying to think through was like, okay, how do we build a platform to do that? If we grow it too much, we're going to run into all the same problems that we just ran away from. So how do you try to be thoughtful about building a firm where we have like the right culture sort of founded on teamwork and humility and grit? How do we, bring together a team of people who complement one another and have a lot of experience together? And then how do we structure this in a way that there isn't this pressure to continue to grow? Because it's a very natural thing in our business. So that's a little bit of sort of how it all came together. I think, bottom line is I realized like it was going to be a regret. And I, on my deathbed at 80 or whatever, I was going to regret not taking a shot. So I took a shot. So far, it's worked. I'll tell you how the story ends in 5 or 10 years, but I'm glad we did. And we're having a blast. I mean, and what I didn't really appreciate was, we've been doing this for a long time, and there are a bunch of things that I've learned along the way where I say, that's a great practice. I'm going to hold on to that, and let's bring that over here. And there are a bunch of things where you say, I see why they're doing it that way, but that's not the way I would do it if it were my shop. And so the opportunity to sort of express everything that you've learned and shape it in a way that sort of suits our value system has been incredibly fun. And, I've never had more fun in doing what I'm doing.
I love it, man. That's a great assessment, and great to hear that the leap of faith worked out well for you. And I think that is, cultures change over time. I saw, I was at Amazon for 7 years, and as it grew, I think it's certainly you saw there's just so many people. It's hard to maintain a culture when it just changes. It's not good or bad. It's just different, right? It just becomes a little different as things get over time, I think, right?
Yeah. We see it in our business all the time. The companies that we invest in, listen, the people who are absolutely critical to success when the company goes from 0 to 100 million of revenue are not the right people to take that business from 100 to 500 because you need more structure and et cetera. So I think of our business the exact same way. Like I fit better here than sort of in the very large platform.
Well, I'm excited to come back in 3 to 5 years and see how the continued growth, obviously, of what you've built there. As we get ready to wrap up, any final thoughts on, again, for our audience out there, things maybe what you wish you knew, or that now that you wish you knew when you were starting out in the beginning? Any kind of pearls of wisdom, maybe a book, maybe just some advice for folks that want to get into the industry. That again, you could tell your 25-year-old self, man, if I had to do it again, I would have done a couple of these things.
Yeah, great question. I think there are very few books that do a great job of explaining the private equity industry. I think maybe in part because it's this apprenticeship business that I described. So I don't have any like great books that I would say, boy, you got to go and read this. There are a bunch of, in the end, I think whether you're building a private equity firm or if you think about it in terms of the companies that we invest in, everything comes down to people. Your ability to assess people, to coach people and develop them. And then, if they're not the right people for that next chapter of growth, to go find somebody who is. Like, how well you do that will determine your investment outcomes. Like, that's the leading indicator. It's the most important thing. And so most of the things that I focus on reading, like G.H. Smart, Jeffrey Smart has written a whole bunch of incredible books about talent. There's a great book called Who, just Who with question mark, which is all about sort of who do you bring onto your team? How do you evaluate them? How do you think about incentivizing them? So I tend to gravitate more towards those types of books. One, because I just think it's the most important thing. And although I've been doing this for 30 years, I know I can still get a lot better at that. Like I get better and better. And, your batting average on people will never be 100%. Like if you're really good, maybe it'll be 65%, but it ain't ever going to be 100%. So anything you can do to give yourself a little bit more of a chance at success is really valuable. In terms of like the investment, like investment issues, obviously like the Warren Buffett letters to the shareholders are like the gold standard. He's now retired. I'd say probably the next best thing, if you don't know him, Howard Marks writes, these incredible letters that simplify investment issues. It just like Buffett, it's a very accessible style. There's not a lot of jargon. It's very sort of an everyday sort of approach, everyman approach to sort of unpacking complicated issues. So I would track down Howard Marks's letters and just sign up for those, because I think in terms of like interesting insights into what's happening in this investment environment and relating it to patterns that have happened over the last 10 or 20 or 30 years, it's a great thought-provoking read. I get a lot out of those every week.
Great advice. I thank you for the time today, Brooke. It's been awesome to have you on the show. I love this, the theme leadership, so critical. Grit, you talked about, in culture. Some of the things that we look for in the veteran space are things that are make you successful in the private equity space. And I know that's something that'll resonate with my audience out there. So again, thank you for the time. Look forward to checking in a few years to see how things continue to grow for you. And I really appreciate you being on the show today. Thank you.
Thanks so much, Beau.
Thank you so much for taking the time to listen to this episode. For more content, follow us on Instagram @TheMilitaryVet or on LinkedIn. Join us at an upcoming event or learn more on our website, TheMilVet.org. Feel free to email us directly at leadership@TheMilVet.org. Thank you so much and take care.